All right. What is up? And welcome back to How to Invest in Commercial Real Estate.
What's up?
Best freaking podcast in Jinx, Oklahoma. Still undisputed.
Let's go.
Where are the challengers at?
I don't know.
Where are you?
We haven't had a single challenge.
It seems like it's been a couple weeks.
Yeah, it has been a couple weeks. You've been frail and tearing stuff.
Yeah, I had surgery last week on the bicep, but apparently it's fixed now, and we just got to wait for it to get better.
Yeah, you got the Terminator look kind of going on over
I
there.
should have put mine on.
Like the Infinity Glove of power.
All right, what updates we got this week?
Lots. We sold the Pickleman's building up in Wausau. Exciting there. We finally sold the Starbucks in Marine Creek, which we may have already announced. We closed on the Florissant out parcels, which we may have announced that last podcast. We're about to close on the Richmond Shopping Center. By the time this comes out, we'll have just closed on that.
Yep.
I'm excited about that deal, man. Solid deal, good market. Got another out parcel sale to do. So super excited about closing that one.
Another loan with Mabry Bank. Shout out Mabry Bank.
Yeah.
If you're in Tulsa, man, Mabry is super easy to do loans with. Very no BS. We're doing laser pro docs, so you don't have to argue about a bunch of stuff. We just drove down the street to a local closing. It's so much easier doing business with local people that you know and trust. And then kind of looking into the future, we've got a lot of stuff in contract. We've got a value add portfolio of shopping centers in Texas, a couple more centers in Amarillo. So very similar strategy to the Martindale deal. If you were in on that, just value add retail deal. Mm-hmm. And then another one in Victoria that fills up that portfolio. We also just got another property in contract in Fort Worth. We're about to break ground on the second retail building in Owasso for, I say second building. It's like our fourth or fifth building out there. But anyway, another building up at 96 in Garnett. Yep. Not a new deal. It's an existing deal.
Yeah, super excited, man. We're trying to line up a deal a month right now. That's kind of the stage of growth that we're in. Can we close a deal a month? And then, maybe next year it's 2 deals a month. And then from there, we'll just kind of keep going.
Yeah. They're getting bigger too. Like Richmond is $9 million. The portfolio we're closing next month is $14 million, I think.
I think it's more. I think like 16.
Yeah.
Landon and Cincinnati was $8 million.
Yeah, seven-ish. Yeah, and we closed on Landon. I don't know if we announced that. Cincinnati, Ohio. They're blended together, man.
That's a good thing.
Yeah, and we were able to get reuse some existing management relationships on the Landon Square, who's also managing Richmond, Virginia, who's been super successful in managing Florissant for us. Mm-hmm. Super happy to have them involved. Anyway, we've been busy, and a lot of stuff going on.
We're now doing advertising for our investors on social media platforms, and we're getting an influx of new investors. And I just want to give a little bit of a talk about, if you sign up for our investor list, you are going to get information about commercial real estate. Had a little run-in with an investor that I won't won't say their name here on the podcast, but they got frustrated that when they signed up for information, we sent them information. And he was like really critical of us and said that we were really super desperate for their money.
And we don't send a lot of emails out, right? We send information, but
there's a welcome package of 3 or 4 emails when you first sign up.
It's 2025. Nobody writes emails anymore, right? Like you sign up for our list and it just automatically sends you information. That's the idea of signing up for a list. Is like, hey, I'd like to learn more. It's not like it's a discount code. Like, come on. Yeah. But it literally says learn more. I'm pretty sure. Invest now.
Yeah, and I just want everybody to know, like, we don't do this podcast to trick you into giving us your money. Like when we started commercial real estate, we had nobody to help us understand the real estate game. And this is an effort to give back. And we want to inspire people to get involved with something that we think changed our lives. We think you can make more money in commercial real estate than almost any other investment. And it really has changed our lives. And so for me, I always wanted to inspire people. And Braden had the idea for this podcast. And it's awesome to get so many people involved in our deals and to be able to send them checks 4 times a year. But what you're not going to do is sign up for our newsletter and complain about us sending you information and then be critical of us and call us desperate. So if you think that's the plan, we're just going to excommunicate you from the business and you're not going to ever invest with us. So
bad plan.
Yeah, I think that's all I'll say about that. If you want information about commercial real estate, sign up. If you don't want emails about commercial real estate, don't bother signing up. Pretty easy.
Well said.
And just a general note on the advertising front, I think we had 17 brand new investors, or am I undershooting that by a little bit?
I thought it was more.
It may be more.
I thought it was like 20
I was gonna say
some new
27?
investors on Virginia.
Yeah. It's a lot of new people we're getting involved, which again, the idea of advertising, the idea of presenting this opportunity is to get more people involved, buy more real estate.
Yeah.
And this is really a novel approach to bring on investors. This has been typically reserved for institutional type companies with high level relationships with affluent people. And we're bringing that idea to the masses through social media, both through the podcast and through social media advertising. And so these are just people. Sometimes you have to be accredited, sometimes you don't. But we're amassing an army of people that didn't know about commercial real estate that were getting involved. And I think it's really, really cool.
It's definitely a new approach. There's a lot of old school institutional equity raising, where you're like wining and dining these family offices or high institutional partners.
High net worth individuals.
You're not selling. You're not asking for the money. You're just getting to know each other, kind of talking about what you do. And then maybe at the end they just say, yeah, I'll write you a $5 million check or whatever it is. No, like the average check writer is a $100,000 check. I mean, a lot of them are $25,000, $50,000 checks, but we have a decent amount more than 100 as well. So, yeah,
we're like people that don't normally get access to these types of deals. We're getting them access, and that's what we think is super cool.
That's how I got started.
What's also cool is that the investors we're allowing in at the lower amounts, the $25,000, $50,000 investors. These are the people that are asking questions, right? We're helping further their knowledge and get them more comfortable so they can increase those check amounts, right? So a lot of people look at it and it's like, oh, the $25,000 investors, that's the naggy investor who wants to know everything, who kind of like constantly emails and bombards you. And while there is a little bit of truth to that knowledge that you're giving them is helping them be more comfortable in the asset class and with you to where that check, like I said, will eventually get up and up and up.
Yeah, 25, it doubles to 50 in 5 years, doubles to 100 in another 5 years. But typically they're a little bit younger. If they're only investing 25, they're maybe 30, 40. And so they're going to increase their affluency over time. They're going to make more money. Their other investments are going to grow their net worth. And so we love exposing them to commercial real estate now. And in 10, 15, 20 years, they're going to be a $200,000 check writer, $500,000 check writer. So like I said, we're building an army of regular people in this deal that I don't think other people are doing.
Yeah, and it's going to when they do have that more money to invest, they're going to be a smarter investor, right? They're going to have dealt with real estate. They're going to dealt with bonds and stocks, and by the time they have a significant amount of money, they're going to know where to put that money.
All right, topic for today, Braden or Brian.
Well, the title is Getting to a No.
This is Joel's favorite thing to do.
This is Joel's favorite thing. So,
yeah.
Tell us what you mean by getting to a no, Joel.
Well, it's really negotiating. And most people are uncomfortable negotiating. They want to get an easy yes.
Yeah, right.
And in this game, what we've talked about before is the value in commercial real estate is improving the income. Yeah. Because every dollar you increase the income can be $10, $12, even $20 in value, depending on the cap rate that you're going to exit at. And so, I had this talk with my people. We have a meeting every week where we go over all the leases across our portfolio, which ones need to be renewed. And we were getting into a habit of, well, they're at $18 a foot, and they're up for renewal. What should we do? Let's go back to them and tell them $18.50 and 3% annual increases. Now, I love 3% annual increases because that yearly compound, it really does drive the income. But what we were finding is that some of the tenants were just like, okay, and they would just take it. And I think we, on one Redbud, we had a tenant where we gave them a 20% increase maybe. I can't remember exactly what it was, and they just took it.
If they take it and they just say yes, you didn't ask for enough.
Yeah, it's kind of a thing around the office where we finally get a deal locked up, and I'm like, crap.
Yeah,
it just happens.
We didn't
too
have
fast. It's
too
like
fast. Too easy.
Getting in there and going ready for a fight. You get all your stuff ready. You just finish sparring, then you knock them out in one punch. You're just like, ah.
Well, you think you've offered something that is good for us, but you could have done better, right?
Yeah, and people hate getting told no.
Yeah.
That is uncomfortable. We hate being uncomfortable, actually. We will do a lot of things to avoid an awkward and uncomfortable situation. And so when you're going to do a lease renewal and you're giving them a rent they don't like, then tenants they're gonna complain. They're gonna maybe be upset. And the thing is, it's different than a normal product, right? If you advertise a price of a product and it's too high, you may not sell anything. But here you have tenants that are in your buildings and they're already leasing from you, and they can't just up and take their ball and go home if they don't like the renewal number you give them.
They have to talk to you.
They have to talk to you, and they may say no, but they're still in your building.
Yeah.
And they're
still talking to you.
They're still talking to you. And so today's just short episode that we're going to do is getting to a no. And that means if you have a tenant that's at, let's say, $15 a foot, depending on their business and the center and the city it's in, come up with the biggest ask you can, right? $20 a foot. Throw it out there. Yeah. That's 33% increase, okay? But what's the worst that can happen? Brian, what's the worst that can happen if you're at $15 a foot and you tell the tenant $20 a foot? What's the worst that can happen?
He's going to cry himself to sleep that night.
I'm not going to pay it.
Yeah, he said, I'm not going to do that.
Yeah.
Okay. Are they still in your building renting from you?
Still in there.
Do you have a chance after they tell you no to go back at $18?
Yeah, absolutely.
Right? $17?
19.
What? The thing is, we're so afraid of that no, but the alternative is you're not going to lose the tenant. Okay, because worst case, can I just go back and say, I'm really sorry. Yeah. I'm so sorry that I'll just keep you at the same rate for 2 years. Yeah. Did I save the tenant? Probably.
Yeah.
Okay, so the worst case is you're getting the same rent or slightly better than you had before. Best case is they take the 20.
Yeah. Right.
Or you negotiate to 18. So you see here, it's not an equal all or nothing. And that's why I think people approach negotiating is they think it's an all or nothing thing where I either get my number or I lose everything. But that's not what it is, right? You're just testing the waters to see where they're at. And just like we've talked about our poker examples, is when you give them a number too high, it's like betting, $2,000 is you get information. They fold, you get somebody to fold, okay, or they raise you, in poker. You're getting information by throwing that out there. That's what we're doing with this idea of negotiating to a no first to see where they're at.
Yeah, no, the more data you have, the better, right? Like having conversations with the tenant and saying, how's business? How's the space? Is there anything you need? If they're coming to you and saying, yeah, everything's great. Business is great. We're killing it. Space is great. Why wouldn't you make a big ask? And then if they don't come to you with those things, like, my front door is messed up, fix the front door.
Yeah.
Like give them nothing to complain about. Like we just had this conversation. You just said business was great and there's nothing I could do for you. I'm just trying to get market rent. Mm-hmm. You said the space is great. So those conversations help. Another big thing that helps is looking at the data, right? Like think about you're renting a house, you're renting an apartment. Your landlord calls and says, hey, I'm doubling your rent. Your lease is expiring. I'm doubling your rent. You bet your ass you're going to get on Zillow and see like, this guy thinks he can double my rent. If you get on Zillow and every other house is that doubled amount, then you're going to be thinking, oh man, this is what it is. Actually, this is what houses are going for. You could stay. Like it immediately flips that perspective of, oh, this asshole landlord versus, well, this is actually what houses this size and age and area of town go for. So having that data with you and saying, hey, I know this may be a big increase, but what you may not realize is everyone around you, all of these other businesses, that shopping center, like that shopping center's double. This one's a time and a half what we are. Like know your competition. That's a massive selling point for you. Knowing that they can't pick up and move across town because there's no vacancy. Or if there is a vacancy, it's 50% more expensive than your rent increase.
Yeah.
And if you know that you still have a cheap place in town, like you're cheaper than everyone else, you just talk to your tenant and business is great. They're doing great. Space is fine. Front door's leaking. We fix the front door, whatever it is. Why would you feel bad raising their rent to market rent? If anything, you should feel bad not raising it to market rent because that, like, what are you doing? Like you bought this to make money. Nobody bought a commercial strip center to just have fun or they were bored. Like,
yeah. The tenant could have been there for quite a while and not even know himself what the going rates are, right?
Yeah, I think people mix business and their personal life too much. Like this isn't some vendetta that I have against like the smoothie place. Like, oh, I'm gonna really get back at them. Yeah. Like that's ridiculous. Yeah. I don't care, dude. Space like this this location, this vintage with no leaks and these traffic counts, it rents for this amount of money. You can get the data. This isn't me. This isn't my opinion.
Yeah, and I would go so far, if you're a landlord, you go on to like an inflation calculator and say, okay, the tenant moved in 2004. They've been here 20 years. Their rent is $9.80 a foot. Okay, well, what did it start at? Well, they started at $6 a foot or whatever. My contention would be that a lot of leases that are in older centers, kind of like the B and C class that we're buying, they're probably paying effectively less rent than they were in the past because of the high inflationary period that we've gone through over the last 10 years. Right after the 08 crash. And so that's what I'm telling my leasing people to do is plug that in and show them how they're paying a less effective rent today than they were in the past. And that'll give you ammunition to convince them, hey, we're not being unreasonable with our increases.
So where have we been successful with a big ask? Do we have any case studies where we've tried it and the tenant said, yeah, okay. Or maybe they just negotiated down a little bit, but it was still a big increase.
We try it all the time, and I'm maybe not weekly, but every few weeks, I'm consistently surprised how fast we came to an agreement on a double-digit rent increase. 10, 20, 30, 40%. Consistently all year. Like the past 12 months, all day long, we're getting these rent increases. And it's to a point where you have a bias that you're affected with. You know, we're giving all of this advice, and at the end of the day, if I'm taking somebody from 15 to 20, it's a little bit of anxiety in the conversation. Even though I said everything I just said, you're still going into that, man, like, I hope this goes well.
I want to confess that even though we were talking about getting to a no and having the courage and not being afraid of uncomfortableness, I'm a victim myself. Yeah. We do a lot of 3% annual increases, and then I see some that they're getting 4 and 5% annual increases, and I think, okay, did I get to a no, or did they just take the 3% a year compounded?
Yeah.
I think many of them have, and so this advice is for us as well as it is for you to maximize your profit in this game that we're playing.
Well, like you said, I think we tend to say, oh, let's get that 3%, let's get that 3% per year bump. Well, why isn't it 4% or 3.5%?
Yep.
I don't think we're asked. I don't. Like you said,
and you may not get both, right? You may not get a 20 or 30% shock increase and 4 or 5% annual increase. So you can play those two together. If I'm a tenant, I really just want to know how much my rent's going to go up every year, so I can effectively plan my business. But once again, like Braden said, if you're in line with the market or with their alternatives, then that really is their problem to figure out. They either are a profitable business that wants to stay open or they're not. Apartments are a little different because there's thousands of apartments. Even in small markets, there would be thousands of apartments typically. Not complexes, but units. Yeah. And apartment units don't vary all that much. And people aren't advertising where they live. That's not important to them. Like look at me, I need the traffic to see where I live. And so people can up and move an apartment and be fine. But businesses are different. People know the location of that business. The sign is on the side of the building. They want the drive-by traffic. And so that's where you can use that kind of leverage in order to get a higher increase than you think you might otherwise get, because they have to up and move their business. They have the risk of customers that used to have a short drive, now have a longer drive. Now they got to convince a whole new set of customers that are close to them to come into their business. All of those factors are going through a business owner's head when you give them this increase. So you can leverage that a little bit more than an apartment.
Yeah. I heard a quote a while ago, and it's really stuck with me, and it was super simple, and it says, businesses are built to service the owner. Right? Like, restaurants are not in the business of feeding people. It almost kind of looks like that, but if they were in the business of feeding people, they would just try to feed as many people as they could. They wouldn't be trying to make money. They wouldn't be trying to mark it up. Like, they would just be, oh, you're hungry? Let me give you some food. So you have to really go to that approach of like, you don't have to egregiously overprice your chicken sandwich, whatever it is. Like, that's what I'm saying. We're not just putting some arbitrary number of like, we're getting a 40% rent increase, whether you like it or not, regardless of where you're at. Yeah. We're just saying that the retail shopping center dynamic the past 20, 30 years has relatively had very stagnant rent growth. You saw this in multifamily, 08 to 14,
Mm-hmm.
08 to 2012, very stagnant rent growth. And that's why multifamily popped so much, is because when people figured out, like when the nation started to figure out, like, hey guys, we can get 10% annual rent growth on these apartments. You can buy 5 caps and make it work. Like, it really enhanced things. We're kind of seeing that in retail right now, where we've seen so much low rent growth and occupancies kind of stable, maybe 10, 20% vacancy. When interest rates got expensive, occupancy went through the roof. So there's no more excess supply. So rent growth really started to surge up. And those indicators, when you look at them and track them, they make sense. And now we're seeing this, not hyperinflation, but hyper rent growth in retail specifically. And it's a very common thing. Asset classes kind of trade off, going through this, where they'll be undervalued and kind of stagnant, and then something will happen and everyone will shove to that, because you can, like COVID and industrial, oh my gosh, they can stay open. They don't have to shut down. It's like, we're getting crazy rent growth on these industrial assets.
COVID really put a hard stop on retail development. And even before that, in the last 10 years with the surge of online purchasing, I think a lot of retail developers just built new product at a slower rate. Mm-hmm. And so you have less available spaces to go, but population is still growing. New concepts are still coming out. And so we're seeing some of the fruit of that now, where we're starting to push retail rents, and occupancies are pretty good compared to the last 10 years. So anyway, I hope this has been encouraging to you guys. You can use this concept anywhere in life. It doesn't have to be commercial real estate. It can be negotiating, a contractor at your house or whatever. He brings the price. Throw a number out. Well, I won't give you that, but I'll give you this. Or if you're trying to pitch a homeowner, right? Get to that no first, and when the homeowner says that's too much, then come back down a little bit. Mm-hmm. But just trying to maximize value and not being afraid of that negotiating uncomfortableness that we normally try to avoid.
Yeah.
All right. All right. Till next time, guys. Keep tuning in.
Yep.